Hello and welcome to everyone in the virtual classroom to learn fund flow statement. In the last lecture, we discussed the meaning of fund flow statement. We also discussed the working capital schedule and how to prepare it. I hope your understanding would be very clear regarding the working capital schedule and how to prepare it. Because every question will get started with working capital schedule first. So after working capital schedule, today in the second lecture of this topic, we are going to discuss how to decide the operating profit from profit and loss account. Profit earned from the business is a very important or perhaps the most important source of fund for fund flow statement. Ideally, maximum fund flow should be generated from the operating profit of the business. But normally, net profit is equal to cash profit is not going to happen. Why? Because net profit as shown by profit and loss account prepared at the end of the year does not show the correct position of inflow of funds generated from business operation. Normally, there is a perception that prevails for a common man is that whatever the net profit has been earned by the business, same amount of cash would have been come or entered in the form of bank balance or cash balance in the business. But normally that is not going to happen. What I mean to say, net profit is equal to cash profit is not going to happen in majority businesses. Because there are some non-cash and non-operating items or transactions are also included or would have been recorded in the profit and loss account. For example, depreciation. You know the nature of depreciation. It is a non-cash expenditure. We are going to discuss this type of items in detail after a few minutes. So to find out correct fund generated or received from the business operation in the context of operating profit received in cash, which would be the sources of fund for the fund flow statement, necessary adjustments are to be made. And for this purpose, one important method is preparation of adjusted profit and loss account. The format of which may appear or may be prepared as shown below. Have a look on the format of this adjusted profit and loss account. Over here, left hand side or debit side, and then afterwards right hand side or credit side. So whether you say left hand side, right hand side, or whether you say plus side or minus side, or whether you say debit side, credit side. On the right hand side or credit side, opening balance of profit and loss appropriation account, the very first item. While on the left hand side or debit side, the last item, which appears closing balance of profit and loss appropriation account. So by putting these two balances from the two balance sheets, you have to start this adjusted profit and loss account. So by putting these two balances, opening and closing balance of profit and loss appropriation account, rather you are recording the profit of the current year, the net profit of the current year. Over here, you have not recorded the net profit directly, but by putting the two balances of profit and loss appropriation account from the balance sheet, just you have recorded the net profit of the year. And afterwards, you have to record non-cash and non-operating items recorded in the profit and loss account by the company. Those items you have to report over here in this adjusted profit and loss account. Once you do it, then afterwards, in the last leg, you will find out the adjusted profit, which would be the operating cash profit or fund profit, fund flow generated from business operation. See, on the right hand side, on the credit side, I have shown it in the red font. Have a look on the items recorded on the left hand side or the debit side. Loss on sale of fixed assets, loss on sale of investment, depreciation written off, goodwill, patent, copyright written off, preliminary expenses written off, income tax provision, interim dividend, proposed final dividend, debenture discount written off, redemption premium on RPS written off, transfer to general reserve, and closing balance of profit and loss appropriation account. These were the items on the left hand side or the debit side. While on the right hand side, credit side, after opening balance, profit on sale of assets, that is fixed assets, profit on sale of investment, and other non-business income, if any, recorded in the given profit and loss account by the company. Then by making the total of the two sides, you will get the adjusted profit, adjusted operating profit, operating cash or fund profit, which would be the fund flow generated from business operation. And as the sources of fund, this would be reported in the fund flow statement on the sources side of the fund flow statement. Now let us discuss some important points of this adjusted profit and loss account. Net profit of profit and loss account needs certain adjustments to arrive for correct position of inflow of funds generated from business operation. Some of them are as below. Number one, depreciation written off. Every company has to provide for the depreciation. Without providing for the depreciation, company cannot declare the dividend, you know it, or else you would be studying it in the auditing and corporate governance in the current year. So depreciation is compulsory to provide. Journal entries that would have been recorded for the depreciation. Number one, depreciation account debited to fixed assets account credited. And number two, at the end of the year, depreciation as an expenditure would be transferred and written off to profit and loss account. J would be profit and loss account debit to depreciation account credit. So ultimately it looks that profit and loss account debit to fixed assets account credit. Now what is the nature of depreciation? By nature, it is a non-cash expenditure, non-fund item. By debiting it to the profit and loss account, company has reduced the profit of the year. But cash or fund has not gone out of the business. That amount of depreciation that you have debited to the profit and loss account remains in the business. So it is a non-cash, it is a non-fund item. And so, therefore, to find out the correct amount of cash or fund inflow or cash or fund profit generated from business operations, it should be added back in the net profit as shown by profit and loss account. So being a non-cash item, depreciation should be added back in the net profit to arrive for cash operating profit generated from the business operation. So depreciation is a very well-known example of non-cash expenditure. You need to find out this type of non-cash expenditure from the given profit and loss account. After depreciation, number two, profit or loss on sale of fixed assets or investment. During the year, company may have sold some fixed assets or investment, and some profit or loss may have been earned or incurred on this transaction, and that would have been recorded in the profit and loss account. For example, a machinery having a cost of rupees 20,000 was sold for rupees 28,000. This sales price, rupees 28,000, in which two components have been included. One, 20,000 rupees cost, and second, 8,000 rupees profit. Total 28,000 will be shown as a sources of fund, receipt of fund in the fund flow statement, because it represents the sales price. It represents the receipt of fund due to sales of this machinery. Now, if profit on this sale of machinery rupees 8,000 credited to the profit and loss account by the company, then profit amount rupees 8,000 will appear twice as source of fund in the fund flow statement. How? First, in the selling price of rupees 28,000, it is already included, and we reported this 28,000 as a receipt of fund in the fund flow statement. And second, in the net profit of the year, it would have been included by the company. And the net profit, whatever it is, would have been shown as sources of fund in the fund flow statement. So to avoid a duplication, it should be deducted from the current year's profit in which it was included. Otherwise, in the fund flow statement, that 8,000 will appear twice. Another logic is that profit amount rupees 8,000 is a non-operating income or transaction included in profit and loss account. And over here, for the fund flow statement purpose, we are deciding only inflow of fund in the context of operating profit generated from business operation related transactions only. Sale of fixed assets or sale of investment does not happen every day regularly. It happens once in a year, and sometimes it happens in a time span of 3-4 years. So its nature is a non-operating. It is not your routine daily transactions. It is a non-operating transaction. So to decide fund inflow generated from business operation in the form of operating profit, this type of non-operating transaction should be adjusted by giving reverse impact, because here we have to decide the cash profit, the fund profit generated only from business operations transactions, while this one is a non-operating transaction, and that is why it needs to be adjusted by giving the reverse impact in the current year's profit. So here in adjusted profit and loss account, it has been shown on the right hand side or credit side. Company had credited that profit to the profit and loss account. It was a non-operating income, and that is why reverse impact means we have to reduce the profit by that amount, and that is why in adjusted profit and loss account we have shown it on the right hand side, on the minus side, or on the credit side of that account. There is no instruction given regarding the treatment of profit on sale of assets or investment in the question. And balance sheet also does not indicate such profit. Then it should be presumed that it is credited to the profit and loss account. And you have to give the treatment like we discussed. Now suppose instead of profit, if it is a loss, then how to deal with it? Suppose selling price is rupees 20,000 and cost of machinery was rupees 28,000. So there is a loss of rupees 8,000. Selling price rupees 20,000 will be shown as a sources of fund, as a receipt of fund in the fund flow statement. And loss rupees 8,000 would have been debited to the profit and loss account by the company. Now, this loss rupees 8,000 as a non-cash item as well as non-operating item should be added back in the current year's profit. From the final account preparation point of view, company was right. It had debited that rupees 8,000 as a loss to the profit and loss account. By doing that, company had reduced the profit of the year, but the nature is non-cash. Loss does not happen in cash. It's a non-cash item. It's a non-operating item also. Every day, this type of transaction, sales of assets, sales of investment does not happen. It is not your routine business operation transaction. That is why it is also a non-operating transaction. So give the reverse impact, increases the profit once again, and show it on the left hand side or the debit side of adjusted profit and loss account. So by this way, you have to deal with profit or loss due to sale of fixed assets or investment. Third point, goodwill, patent, copyright written off. You know the nature of these items: intangible assets, invisible assets. These are the assets which are the real assets, but it is intangible, invisible. They are the real assets. But what is the nature of this type of assets? Today you might be having a good value, big value of these assets for your business, but there is no guarantee that it will last forever. And that is why, considering the nature of this type of intangible assets, wise businessmen do prefer to write it off as early as possible, but gradually by applying the financial prudence. Because there is no guarantee that this type of assets will remain forever in the business. So by applying concept of amortization, to amortize means to spread over in a time span of so many years. So by applying the concept of amortization, company will gradually write off this type of intangible assets. Now suppose in the current year, it has been written off by applying the concept of amortization, then the journal entry that would have been recorded would be profit and loss account debit to goodwill account credit to patent account credit to copyright account credit. Now you know the logic for this transaction, that the concept of amortization has been applied. It's a non-cash transaction. There is no cash, there is no bank in that transaction. Just little bit amount has been written off in the current year to the profit and loss account, and the remaining balance of that intangible asset will appear in the balance sheet. So being a non-cash item, this one should also be added back in the current year's profit by giving the reverse impact. So we have to report it on the left hand side, on the debit side of adjusted profit and loss account. Adjusted profit and loss account, a simple rule. The items due to which you have to increase the profit of the current year would be reported on the left hand side or debit side of adjusted profit and loss account. And the item due to which you have to reduces the current year's profit would be reported on the right hand side or credit side of adjusted profit and loss account. Simply remember these two lines. Fourth one, preliminary expenses or debenture discount written off. Once again, the nature, these are not the real assets, these are the fictitious assets. There are three types of expenditure. You already studied revenue expenditure, capital expenditure, and third is deferred revenue expenditure. This one falls in that third category. Over here, concept of amortization, once again is there in the picture. Every year, little bit portion would be written off to the profit and loss account, and remaining balance of preliminary expenses or debenture discount, whatever it is, will appear in the balance sheet. Journal entry, profit and loss account debit to preliminary expenses account credit or debenture discount credit. It's a non-cash item. You know it very well. The concept of amortization has been applied to write off this type of fictitious assets. And due to the nature of this transaction, it should be added back by applying the reverse impact in the current year's adjusted profit and loss account. So that would be shown on the left hand side or debit side of adjusted profit and loss account. Because we need cash profit, fund profit generated from business operation, and that is why net profit as decided by the company should be converted into cash profit, fund profit generated from business operation. So a process of conversion is going on, conversion of net profit into cash fund profit received only from business operation, and that is why this adjustments we are giving for the process of conversion of net profit into cash fund profit generated only from business operation transactions. Next point is very important. In every question you have to deal with it. Income tax provision. There are two methods to deal with this item. First, under the first method, it can be treated as a current liability. By nature, income tax provision is a current liability. So certainly can be treated as a current liability in the first option and will be included in the working capital schedule. And payment of taxes paid in the year, if any, will not appear or shown as an application of funds. You have to include it only in the working capital schedule as a current liability. While under the second method, there are two ways to deal with it. So under the second method, first way, if additional detail or information is not given or question is silent regarding payment or provision of tax in the current year. In this situation, provision, income tax provision of previous year, which would be the opening balance of the current year, be assumed that it would have been paid in the current year and should be shown on the application side of fund flow statement as an application of fund. And closing balance of current year being provided from the current year's profit and loss account should be added back to the profit of the current year. That is on the left hand side or debit side of adjusted profit and loss account. But the second way is that if additional information is given having some details about tax provision or tax payment in the year, in majority of the question this information would have been given, either the current year's tax provision or the current year's tax payment. So in majority question, this information would have been given in the question itself. Then a separate ledger account for tax provision account should be prepared and balancing figure may be found out from this account. Here I have prepared that format of tax provision account. It will appear like this. Have a look on the format of this income tax provision account under this particular way. See, credit side opening balance, debit side closing balance. Either or one information would have been given in the question regarding for the payment of tax for the current year. If that is the case, income tax provision account debit to bank account credit, then you will get a balancing figure on the credit side, that is the current year's provision, profit and loss account debit to income tax provision account credit. If current year's provision has been given in additional information, then profit and loss account debit to income tax provision account credit, then you will get a balancing figure on the debit side, which would be the tax payment of the current year, bank account, red font. So payment of tax should be shown as an application of fund in the fund flow statement, and current year's provision taken out from the profit and loss account should be added back as a non-cash item in the current year's profit, that is on the left hand side or debit side of adjusted profit and loss account. This second method should be a preferable or an advisable method. As I told you, in majority of the question, some additional information always would have been given either for the current year's tax provision or for the current year's tax payment, and considering that this second method is an advisable method. Be careful about this income tax provision treatment because in every question you have to deal with it. After income tax provision, next item interim dividend, and then afterwards seventh item final proposed dividend. You know it very well. Last year corporate accounting final accounts, number of times you already saw this interim and final proposed dividend over there. Let me repeat it once again over here because dividend you will have to deal with it in each and every question. Interim dividend first. You know, power of interim dividend lies with the management. In between the year at any point in time, company can declare the interim dividend, and for the payment, company does not need any consent from the shareholders. Immediately it can make the payment also. Two journal entries would be passed. First, profit and loss appropriation account debit to interim dividend account credit, and second, payment interim dividend account debit to bank account credit. See the nature of first journal entry. Profit and loss appropriation debit to interim dividend account credit. By debiting it to the profit and loss appropriation account, company has reduced the profit of the current year. But payment has not been paid in the first J, just company has taken out that amount from the current year's profit. So nature is non-cash. Nature is non-operating. Interim dividend is a non-operating transaction. It doesn't happen regularly every day, maximum once or twice in a year. So first journal entry indicates the nature of transaction that is non-cash and non-operating. So give the reverse impact in the context of conversion of net profit to fund cash profit generated from business operation. So add back it in the current year's profit, adjusted profit and loss account, left hand side or debit side. But the second journal entry for the payment, interim dividend account debit to bank account credit. You paid it. That indicates the application of fund. So in the fund flow statement on application side, this payment of interim dividend will be shown. Final proposed dividend. In majority of the question, you have to face this final proposed dividend. It is also the distribution of profit. Two journal entries. Number one, for the proposal of the current year, profit and loss appropriation account debit to proposed final dividend account credit. You know, company cannot make the payment of this final proposed dividend until and unless it receives the consents of its shareholders. But this consent will be possible only in the annual general meeting, and AGM normally happens in the month of July, August, September next year. So once you put the proposal, then final accounts preparation after 31st March audit process. It is a big lengthy process. Normally, once the audit is done, June, July is there. And in the month of July, August, September, that is the next year, AGM will be called upon, and in that AGM, this proposal of final dividend, final proposed dividend will be discussed. Shareholders are supposed to give their consent, and then afterwards, within few days, company can make the payment of final proposed dividend of the last year. Last year as on 31st March. But AGM took place in the month of July, August, September next year. Got the consent in that AGM, and now payment has been paid. So last year's proposed dividend, see, now has been paid in the current year. Due to provisions of Companies Act, this is the reality. And that is why famous two lines are there for the proposed dividend. Let me tell you those two lines. Proposed dividend of last year always would have been paid in the current year, and the current year's proposed dividend will be paid in the next year. Think about this two line in the context of consent requirement of shareholders in the AGM. If you digest it properly, you will understand this two line. Once again, I am repeating. Last year's proposed dividend would have been paid in the current year, and the current year's proposed dividend will be paid in the next year. If instruction is there in the question, you have to follow it, you have to apply it. If instruction is not given, and even though you have to do it, because it is the provisions of the Companies Act that should be fulfilled, that should be implemented by every company. It is the law of the land, it is the provisions of the Companies Act. तो कहते हैं तो भी करना है, नहीं कहते हैं तो भी implement करना है. These two lines, last year's proposed dividend would have been paid in the current year, and the current year's proposed dividend will be paid in the next year. So current year's proposal as a non-cash item, as a non-operating item, will be added back by giving the reverse impact in the adjusted profit and loss account, left hand side plus side, and the payment of last year's proposed dividend paid in the current year, that will be reported in the fund flow statement as an application of fund. So be careful. You have to deal with this final proposed dividend in almost every question. So your understanding must be very clear. Next point, transfer to general reserve. You know, every company does that. Before you declare and pay the dividend, some savings should be made for the company itself. And you know the rules. Before you pay or declare any dividend, some savings always should be made for the company. It is merely an appropriation of profit. Journal entry would be profit and loss appropriation account debit to general reserve account credit. There is no word cash or bank there in this journal entry. So being a non-cash item, being a non-operating item, it is a non-operating item. It happens once in a year only. So being a non-cash, being a non-operating item, it should be added back by giving the reverse impact in the current year's profit, adjusted profit and loss account, left hand side or debit side, report it. And number 9, non-business income. If in a given question, if there are some non-business income reported in the profit and loss account, then you have to deal with it because it is a non-operating income. So if it is a non-operating income, it should be adjusted by giving the reverse impact in the current year's profit, and you have to report it in the adjusted profit and loss account. So these were some of the items that you have to deal with in the context of our process of adjusted profit and loss account. Why we are preparing adjusted profit and loss account? Once again, I am repeating, to convert the net profit into cash fund profit generated only from business operation transactions. We need to convert that net profit into fund cash profit. Once you do it, then it would be the fund cash profit generated from business operation, and it would be reported in the fund flow statement as a receipt of fund from business operation on the sources side of the fund flow statement. So it's a big process of conversion of net profit into fund cash profit generated from business operation. So be careful. Let me hope that your digestion, your understanding will be very clear. regarding this process of conversion of net profit into cash fund profit generated from business operation. After this process, let us verify the format of fund flow statement. There are two formats that can be used for the preparation of fund flow statement. One is horizontal or T-shaped format. Have a look. Sources of funds, application of fund. Some items have been shown on both sides that indicates either the sources or application. The total of this fund flow statement must be the same on sources as well as on the application side. So like you were verifying the total of balance sheet last year in the corporate accounting, over here also your total must be tallied, your total must be the same for both the sides. So you can have a sigh of relief if your total does get tallied. You can assume that your calculation, your answer is a correct answer. Normally you can assume like that if the total of both the side is a similar total, is the same total. Though some mistakes may happen if it is a similar amount mistake on both the side, then even in that situation your total may look similar, but even though it may be a wrong answer. After horizontal format, you can apply the vertical format also for the preparation of fund flow statement. Just the same items. Sources of funds, sources means inflow or receipt, and then application means outflow or usage of funds. Just the way of presentation is different. Horizontal and vertical both are giving the same picture, both are giving the same answer, just the way of presentation are different from each other. Like we have to reach for a particular destination and we can utilize two different ways to reach for that destination. Likewise over here we have to report the fund flow statement, but there are two ways. Either you can utilize the horizontal format or the vertical format, like that. Meaning an answer and understanding remains the same. We will use horizontal format in our practical question. Let me repeat it. Horizontal or T-shaped format that we will utilize in our practical question. So this was the specimen format of fund flow statement. Horizontal and then vertical. Let me hope that this entire discussion that we discussed today will be very clear in your mind. Your understanding would have been expanded in the context of preparation of fund flow statement, working capital schedule, then adjusted profit and loss account, process of conversion of net profit into cash fund profit generated from business operation, which will take your maximum time in the practical question, and then afterwards this fund flow statement, which looks small. See, horizontal format, it looks very small. But to reach at the total of this fund flow statement, the process is very long. Once you cross over that process and you complete the process, that lengthy process, you will reach at the total of this fund flow statement, which must be the same, similar on both the side of sources of fund and application of fund. Let me request you, please repeat the entire discussion having two video lecture. Number one, last video lecture, and number two, today we discuss all this thing of adjusted profit and loss account and format. Do repeat it once again, have a relook for the entire discussion, and be clear about your understanding regarding the conceptual knowledge of fund flow statement. Because only on the basis of your conceptual knowledge you